Hi traders, it's Stuart here. It's where are we? Well, Wednesday, middle of the week. It's the 5th of the 2nd, 25 today, or 5/2/25, or 2/5/25 if you insist on the American nomenclature. Hope you're all well. Hope you've had a good day. It's been pretty miserable, manky here in London today. But I was out at 5 o'clock here, and it was still light. So spring is in the air. Spring is around the corner. Hopefully, fingers crossed. So hope you've all had a good day. That can't be said for the services numbers we've seen today. Right across the board, they've been very disappointing. Starting this morning with the Chinese services. Still in just about expansion mode, but come in missing expectations. See all the red on the board here. 51 from 52.2 last time. Spain 54.9 from 57.3. That was a big move down. Italy 50, just over the break-even point where we go from expansion. Sorry, where we go into expansion from contraction. The 50 number. France, unfortunately, didn't quite cross the threshold. Germany better, holding everybody else up, but really it's a bit of a weak number. And then here in the UK as well, they were missed this morning. So we had a mixed bag across I say the Asian data and the European data, a bit disappointing. Remember, services is so important. The PMI data is so important because it's a forward-looking indicator. Services accounts for a huge portion of these developed industrialized countries' economies. 85, 88% of businesses in the economy is assigned to the services sector. So all these high tech, leading edge, as they call them, new technology companies all fit into that services sector. Disappointing numbers there from Europe. I'll just come down to the US. I'll skip forward to the US data as well, and that the US one was also disappointing, although it's still leading the sort of the global leader, and that's still the case. It that was actually looked a wee bit better earlier on with the S&P number, but the more important ISM number came in missing expectations again at 52.8. So really the only good point was the way the S&P measured their services composition number. So that's came in a wee bit better than expected, but generally it's been a weak number. The other highlight today has been the non-farm payroll numbers from the private sector, the ADP. ADP are a company that produce payrolls, do lots of payrolls actually for big corporate organizations. So they have a very firm feel about the private sector in particular when it comes to payroll changes or employment changes. That's coming at 183,000. There was obviously a lot of questions about this particular indicator and with its correlation to non-farm payroll. A few years ago, it was quite highly correlated to a positive number on Wednesday would lead to a really positive number for non-farm payrolls on the Friday. That's broken down significantly in the last 4 or 5 years. Longer than that now, to be honest. So the ADP themselves actually started to recalibrate it. It was taken away for a few months. It's come back, and it's still not a good guide of what non-farm payroll might look like on Friday. So certainly the correlation between the two was broken quite significantly. A lot of that, there's lots of questions about that. Some of the people saying it's the influence of government sector employment, and others saying that ADP is a bit too narrow in its calculation, which is why they changed it a few years ago. But anyway, the point is it's showing strength again in the US economy. And how many times have we said that over the last few years? 183,000, a very positive number. 34,000 better than expected. And last month was also upgraded from 122,000. You see here, you can see here, this is 176,000. So this is obviously backward looking. The PMIs are a bit more forward looking. So again, we got this mixed bag. Obviously, the other key thing is the news flow out of Washington that's affecting and impacting sentiment as we go forward. The other noteworthy piece of data today has been the inventories, the weekly crude oil inventories coming in a massive build at 8.66 million. That's very bearish for oil prices and gasoline prices and distillates and what have you. It was expected around about 2.4 million. Is expected to have had a build, i.e., a build of a rise in the inventories, but it's a significant build showing potentially weaker demand in the US economy as we roll forward. So again, mixed data coming out. As far as Fed speak, we had lots of Fed speak this week as well. The one I noted earlier was Barkin basically ruling out, reading between the lines of what these guys say, ruling out any chance of rate hikes coming from the Fed. And I think Bostic was Bostic speaking. Bostic was speaking yesterday, and it's Bowman. That's it. Bowman's speaking in about an hour's time. Less influential voice from the Fed. We keep saying we're in the middle of earnings season. It's been a stellar one so far, but it's been a really negative stellar one today for Alphabet and Google. Both the Google A and B stock is down. It was down over 8% at one point. I think it's about 7% at the moment. On a miss on their cloud businesses. Not clear how that's happened because they have so much control over data centers and what have you, but a miss there. AMD yesterday, the big hardware chip manufacturer, also their stock is down 7%. So stocks have moved lower initially in US trading, but we're back up again now. This is the S&P 500 on. This is our MACD parabolic SAR setup here on the black chart, so you can see that. Okay. And so here it's on the open, we were moved down here. This is the 15-minute candle. Yes, so the open here at 2:30 my time here in London. We were down and we've bounced back up. We turned positive, so mixed numbers. Obviously, the politics continues to swirl. I'm not going to comment on what Trump said yesterday about Gaza and Palestine, but again, firing from the hip somewhat, one would anticipate, but to see what he really meant by that. We'll see how it all comes out in the wash, obviously, but volatile times continue. So anyway, stocks continue to move higher, 60.56 for the S&P 500 at the moment. Nasdaq's been weighed by obviously Google and AMD, but we've recovered from that, as well as the volatile opening half an hour. But again, we've recovered to quite I think these are day highs as well for the Nasdaq. Yeah, so day highs for the Nasdaq here, 21,632, the Nasdaq 100, and the Dow. While we're here, we'll come back to these in a minute. And the Dow much more positive. It's not weighed by the tech companies. It's having a much stronger day. The Dow's leading things at the moment. Over on the actual cash market at the moment, the Dow's up 0.57%. The Nasdaq, the weighted Nasdaq for the day is actually flat, and the S&P is up 0.26%. And the small caps, the Russell 2000 is up the whole 1%. Nvidia's bounced, and Broadcom have also bounced. Broadcom's up 5.6%, and Tesla is down 3.4% at the moment. Amazon's off 2%, and Apple's off 1.1%. So far today. Obviously, another couple of hours of US trading to go. So let's just the calendar for the rest of the week. We got the Bank of England tomorrow. I'll be live for that as well, so join me for that tomorrow. So a whole host of the split in the voting intentions is obviously always quite interesting with the Bank of England. Rates expected to come down by 0.2 by 25 basis points to 4.5%, in line with the other major banks. Bank of England currently has the highest of the major central banks at the moment at 4.75%. We got weekly claims, which has been incredibly robust out of the US again. See if that's in line with the ADP reading we've just seen today for the US. And Bailey has his face in the press 45 minutes after the later on in the day. It's not half an hour, but that's another separate speech on that later on. Daly, Waller, and Bailey again tomorrow, and Macklem's out tomorrow, head of the Canadian Central Bank. So lots of central bank speak tomorrow. but prime point of interest will be the Bank of England and how sterling has been performing. We were long last night and on that cable trade, and we've hit first target, and we're still running up nicely at the moment as well. So we'll have a look at that in a minute as well. It's very hot where I am here. I don't know. Let me turn the heat up. Excuse me, I'm had a really bad cold over the last 5 or 6 days. I'm just getting over it. Much better today, thank you. So guys, as usual, if there's any particular assets you want to have a look at, let me know in the question box. If not, I'll just rattle on through as normal. Let's just check. I've got any messages here. No, everything's looking cool. Very good. Okay, so we'll run through the power of the MACD and this parabolic SAR setup. It's very two simple indicators. Parabolic SAR, lots of people find quite confusing, but I'll run through that for 15 minutes or so as well, and then we'll look at our trades from yesterday. There were 4 last night. Let me just bring up my Discord chat. Bring up there. We'll come into there. There was 4 from last night. So you hear on this trading strategies number. So there was these 4 here. One's been stopped out. The pound yen was stopped out. Pound against the dollar has hit first target, and pound CAD. As I've written here, I have a history with this pair. It holds the longest running losing streak in my system. Just to elaborate on that note I put up last night. The reason I put that up there is that these are end of day trades. So there's lots of pairs that my system is scanning, and it's not just forex pairs. But a few years ago, I had a run every time the pound CAD came up, whether it was a long trade or a short trade. This was on an end of day basis, so the only consistency, the only common parameter was it's an end of day trade. I had over a period of about 4 or 5 months, I had it wasn't that long. I don't think it was short. I think it was about 3 months. I had about 6 or 7 consecutive losing positions on pound CAD, and it started to get into my psyche. So every time pound CAD came up, it was like, oh, do I take this? I know the system overall works well, so you should take every indicator, every option that comes to you. But the psyche of it was that I'm going to lose again because I've lost every other time on the pound CAD, and it was I had 6 consecutive losing trades in a row every time pound CAD comes up. So even now, every time the pound CAD comes up, I still think about it. Think, oh, yeah. So it sits there in your psyche. And that's why, another great example of why, trading is a mind game. Trading is a mindset. It's not a technical game. It's not it's not an understanding of economics or an understanding of strategies or gurus or, understanding leverage and margin. They're all very important and what have you, but really it's your emotional state. It's your managing your risk, managing your edge, finding an edge or finding something that works for you. When people talk about edges, that's what they mean. Something that's, it doesn't have to be the strategy. It's quite often isn't the strategy. There's lots and lots of strategy, hundreds of thousands of successful strategies. It's how they're applied by the individual trader or groups of traders or the interpretation of it. It's how they deal with winning, how they deal with losing. And that's what keeps the professionals in the game. That's what keeps people coming back to do it more and more. That's what's kept me going all these years. It's just knowing overall you end up winning. But that's my little story around pound CAD. 6 consecutive losing trades over a period of 4 or 5 months. And it was put me off. Really difficult to then press the buy or sell button every time pound CAD comes up. But came up again last night. I think it's the first time here at the PropTrade that's happened. The pound CAD's triggered here. Certainly the trades we've been putting up here as end of day trades. So we'll see how that one pans out. We'll have a look at it later on anyway. But that's the background to it, and we'll see if we've got some more later on. So let's have a quick rattle through the markets while we're here. So stocks have been weak. They've moved up to the upside. The DAX and the FTSE in the UK also finished the day positively. DAX is now trading at 21,600, pushing higher. We've got to the daily time frame, see how it's recovered. So all-time highs last week. Obviously, huge shakeout on Monday, and we're back up Wednesday. So DAX back up. UK 100 also big recovery today. Obviously ahead of the Bank of England tomorrow. I'm saying obviously it's not obvious at all, but 8,600. So all-time closing high was last week up there at 8,665, and we've had a strong day for the FTSE as well today, and sterling doing likewise. Let's just go through the assets. So crypto earlier was down. Bitcoin was down earlier. Sorry, let's go back to the hourly chart for the intraday stuff. And we remain a wee bit down. There's our 100,000 level. We were up playing with that yesterday. We've been down most of the day, and we're sort of sliding sideways currently. I've got 95,700 on this chart for some reason. I'm not quite sure why, but there's usually a reason. So that's a bit of a support area from before, presumably. So we've weakened in the last couple of hours. Bitcoin currently trading at 97,000 and very much sideways action here on the hourly chart. So that was, I say, that support area is there for a reason. 95,750 for so it's played out today there on for crypto today. The major crosses, not the crosses. Let's start from the bottom up for a change. Sterling, which we were, let's go back to the other layout. We'll come up with our lines on our charts on. This is our daily chart from yesterday. So we took a long position and to close last night here. So stop loss. That's yeah. And we took it out this morning. There was 50 pips on offer there. I think we took close half a position, and that remains a long, and that's looking on my other system, my other shorter term day system. That's looking to trigger long today as well. Simply, I would guess it's the 50-day moving averages playing, ticking that system box today. As you can see, the blue line here come down, flattened out, but all nicely aligned. So there's a big, thick resistance at the 125 level. The 50-day moving average is there as well. 125 for cable traders is super significant. So we've breached that today, got to our first target, and we're still long. And we'll see how that finishes today. We may add to that position from that other system tonight. But we'll see how that pans out this evening. So strong sterling today, going into the head of the Bank of England tomorrow, and they're expected 25 basis points cut. Euro trades at 104.12 at the moment. So again, another similar to the sterling. It's recovered from Monday's shenanigans where we went all the way down before we closed very positively. Another volatile day yesterday, less volatile today so far, but another one that's running into its key resistance area, the 50-day moving average sitting there at 104.15. We've been over it some part of today, but currently holding 104. So we've got the tail of the weaker dollar this week continues, but into key resistance areas. So again, watch that on an end of day basis. Big fat support, literally where we're trading at the moment, 104.15 for the euro. The Aussie is back and recovered quite significantly again. Another one that's over right on its 50-day moving average. So it's a similar move here across these major currencies. And in a similar scenario, so 50-day moving average, literally where we are at the moment, 62.85 is where the 50-day sits. And a break of that would be positive, but it is a significant resistance, as with all these areas. You see here, it's provided support or resistance to the move down before it broke. So we're likely to possibly play with this for 2 or 3 days. Last time we didn't, we rejected it quite quickly, but we'll see where we go forward from here. So the dollar very much in focus, and the major cross is a similar situation. Dollar CAD is back down to 143. from the hootenanny we had on Monday, and the tariffs, no tariffs come, but they're only for a month. Sorry, being delayed, but they're only delayed for a month. Canada tariffing US imports as well. It's been a bit quiet today as far as the political shenanigans and noise from both the Canadians and the United States around their northern border. But again, you see what see the pattern forming here. The 50-day moving average becoming absolutely vital again. So 143 key support area for dollar CAD, and a break of that, and the white space down here opens. You can see how we've gone up quite steadily. We could break out quite significantly, given that we were in a big channel for a long time, consolidating at highs, stronger dollar story. All the news over the weekend, over the tariff stories, and the putting some meat on the bones now. And so break down to 140, and quite quickly, potentially, can't be ruled out either to the downside. But anyway, see what happens here. It may break the 50-day as it did on the way up in one clean break on the first attempt. It may, as is normal with a 50-day, hang around or consolidate through this level for a long time, for 3 or 4 days, and then dip away from it, try to break away from it. It's fairly typical with a 50-day, but let's watch this as we go forward for the rest of the week and into next week as well. So 50-day moving average on all these dollar crosses is the point I'm making this evening, my friends. Dollar yen, differently, it's already breached its 50-day moving average as the yen continues to improve. This is our biggest mover today. Dollar, yen and sterling doing quite very well today. So 152 is the next big line in the sand for dollar yen, and it's had a very well, depends whether you're long or short on that one, how you're viewing it. But dollar's been weakest against the yen. Yen's been quite strong against its sort of parties as well. So hence that getting stopped out against sterling earlier today. So 152 to the downside, and 150 is the next big line in the sand if this unwind continues. Remember, we talked about this last week about the breaking of the triangle. So if we've traveled from this top to this bottom here, then the extension is to the downside. So it brings in the 150 and the 148.64. The line we put in that intraday low from December 2024. It's another line in the sand, but 150 certainly the big support area for dollar yen. But the trend continues to move, or the down move continues, and it's nicely with the trend. You see the 20, the 5, and the 9 all rolled over. The 50-day is here through this key fib level around the 155 level we talked about for a while as well. So that continues to unwind to the downside. On the flip side, gold just keeps going. I don't know how many are still running this movement up, but gold just keeps running new all-time highs day after day after day. And again, I moved this earlier this morning, new all-time high, the 5th of today, and it's gone higher since I've done that. So that we've moved even higher again, and we are, where's that log? Let's just bring it must have happened in the last 30 minutes, I guess, a 15-minute time frame. There we are. It's happened almost been when I was out, actually. I went out with the dogs, this afternoon. I wasn't out with the dog at 4 o'clock. I thought I'd done that before then. So 28.82.50 or 28.82 for the sake of round numbers. I'm not getting that accurate right now, but you get the point. 28.82, $2,882 you would require to part with if you wanted 1 troy ounce of gold currently. So all sorts of things, as we've said, continue in this rally. Supporting this movement, the geopolitical uncertainty, the seasonality, obviously economic potential uncertainty with the tariff issues. What's it going to look like? The Chinese responded yesterday, a bit limited response. Europeans worried, the Brits are worried. Trump's getting his own way, but it's really only been a token troop movement by the Mexicans and the Canadians who were going to do it anyway. But yeah, we'll see how it all pans out. But as far as the gold market is concerned, we're pushing all-time highs, and that's suggesting there's proper serious demand there from central banks, perhaps expecting the weaker dollar, or just as general, and on top of that, a general safe haven bid as well. And as I would guess, there's some significant bullion being squandered away by some significant central banks as well. On that one, obviously the situation in the Middle East and in Ukraine continues to weigh. Obviously the crazy announcements from Trump yesterday about Gaza has been pushed back really aggressively by Saudi Arabia in particular, which is somewhat of a surprise, but a very, very clear statement from Saudi Arabia and lots of Trump allies about, two-state solution is the political solution. But he's got people talking again, which is what he does. You got to give him credit for that, I suppose. Anyway, gold is still on the bid. People want gold, the solidness of it, the solidity of it. Stick it under their bed if they can't get it, if they can't afford to put it in a vault. So gold continues to hold sway, and just trail your stop loss up. If you're following this up, the daily breaks, you could have added to it. Big candle there on the 30th, and people are probably adding this week, adding to this break of the 2800. So off we go to the upside. So gold remains very well bid. Time is it? It's 26 minutes past. Right, let's. That was gold. We had a look at indices. We had a look at the major crosses. Let's have a look at our current open positions. Where are we? We were CAD Swiss. I think that's gone nowhere. I think if I remember right, CAD Swiss. These are all from last night, my friends. CAD Swiss. Daily. So we got in last night. It's actually out of the money now. So we've had a good start today, and we've had quite a strong move up, but we've removed down. So that's looking like that might be getting closed now. If we hold the 50-day move now, I'll be happy to do it, as it's only moved on. So, but we're out of the money. CAD Swiss at the moment, but we'll just stay patient with that for a little while. Our stop loss is down here at 860. I think CAD Swiss was still pound CAD, the one we looked at before. We looked at pound CAD before, didn't we? I guess it's just pound CAD. So again, another one. This is entry to go short on this one. It's a big candle on the Monday. Followed through yesterday. We haven't followed through today. So we got in last night just before close. Our target's just here, but again, that's bounced back against us. So again, watch that one. So that one's out the money, pound CAD. Sterling, we'd already hit our target, hadn't we? In pound yen, what's the other one? Pound yen. This was entry was it wasn't there. What was it there? Is it there? 192? I can't remember what it was. But anyway, it's been stopped out. It's a losing trade. Yeah, that's confusing. Let me just. I must have put those lines on in the wrong place, but it's obviously reversed during the day. I think is that what's happened there. So I'm looking confused. So this was entry yesterday here. Is that, have I moved these lines since? I'll have to check my system. I'm sure it was stopped out this morning for less for 26. I'm going mad, aren't I? I'm sure it was stopped out. 192, 192.16, 191.90 is what that should say. Or what that one? 91.50. Oh, must be. Oh. I've got. I'll have to double check that. Won't do that while I'm live with you all. I'll check that again. But I had that as a losing trade. Oh, it's gone down, hasn't it? So anyway, that is a losing 26 points on that. That one. What I'm going to do. Somebody's asked me to do them actually on this demo system. So I'll copy them from my platform instead of just marking the lines on here. I'll actually open the positions on on this trade locker platform as well, as we move forward as well. So I don't have to keep messing around with all these lines and stop losses and take profits and manually adding, showing them what I've done for my other system over here. So I'll do that from tonight if there's any new trades tonight. And the other one we'd had was the pound. And that's, I think we showed this before. So that's the entry we got last night here, and our stop loss, our initial target was this one here. I should say entry from the 4th last night here, and we've hit our first target, and that's looking to go along. We did show you that before, didn't we? Yeah. Okay. Let's go back to the other thing I was wanting to look at tonight was the setup for this the MACD and the SAR parabolic SAR indicators. Okay, let's just let me just take off the VWAP of this one. Remove. Okay. And let me just go back to, I'll just leave this one as sterling. Okay. So the rules, so two very simple indicators. The parabolic SAR, great trending indicator, but it does have a habit of chopping around. Parabolic, things that go up very, very steeply. SAR, stop and reverse. SAR, stop and reverse. It shows on most trading platforms as little dots or diamonds or whatever shape you want to be, either above or below the price action. It's a great trending indicator. It's not so good when markets are going sideways. It can flip around quite a lot and too much for sideways actions trading. See here, see how it's been from under, it's been here, it's under the price action, here it's above the price action, under the price action and sloping up, which is quite good because we were trending up, but here it's sort of flat, and that's, in and out, in and out, in and out, and it's the extremes before it turns because it's parabolic. And so it's quite, it's good. I like it. I haven't used it a great deal, but this combination works really quite nicely. So we smooth it out with another strong popular indicator, and that's the MACD, the moving average convergence divergence indicator. And what we're looking for here is particularly not the histogram so much as the cross of the K and the D line, the lines here that plots on the MACD indicator. The orange line, I've got it set here as orange, and the blue line, the difference between excuse me, whether we're trending on or we're diverting from price action. So what we're looking for first, that the leading indicator, if you like, or the first indicator here is the MACD. So we're looking for a cross on the MACD signal line. So let's talk about this bit. There was a big clear cross here. So here we've had the blue crossing above the orange, so this is looking relatively positive, and just so happens on this particular asset at this particular time frame here, you can see through this candle here, there's been a change in the parabolic SAR as well at the same candle. So in fact it hasn't. If we zoom up, let's make that a wee bit bigger, you can see that. You can see that hasn't actually happened there, has it? The cross on the MACD didn't happen till the following candle. What happened on the candle before here at 8 o'clock, the 8 o'clock candle, or the 7 o'clock candle, positive candle through a key level 123. So that's another, thing that's on your side if you're looking to take this long. Was that it closed above 123. The parabolic SAR had flipped the candle before, but the MACD hadn't crossed. So the MACD crossed here. So that's a buy signal there. So that's a buy at 123.06. And then the stop loss on this with this strategy. Some people like to use the parabolic SAR as their stop loss. I think that can be a bit catastrophic. It's too far away. However, at this point on this particular example, the stop loss is at the turn of the market where we had this big gap down on Monday, and we bottomed and floored at the 123.2250 area. So that's a safe, very safe stop loss. And then just as the market moves up, trail the stop loss up after as the trend starts to move. Now then, to get out of this position, that's us in. Okay, so we've been filled here at 125, 123.05, and we're just moving our stop loss up as the market moves up. Big candle there, probably leave our stop loss down there. But to use the parabolic SAR potentially, I'm saying you do, but potentially to signal, oh, perhaps this runs over. As you can see, the parabolic SAR stays positive for long trades, i.e. because it's under the price action, until right over here, till 4 o'clock yesterday morning, Tuesday morning, before it flipped from below to above. So when the parabolic SAR is above the price action, it's suggesting that prices may be going down. So that would be our exit. So we got in here and we would have got out here on that one, on the close of that candle there. So nice pip gain, 100 odd pips from 123 something to just over 124. So we've taken the meat of that move quite comfortably. Okay, now the next one is an example of where it doesn't, in fact, it didn't actually cross again. So we didn't go short. We'd gone long again because the blue's gone from below to above the orange line again. The parabolic SAR has also flipped again, actually on that. So it's actually not sort of working out clockwork. Here on the with the sterling moves, because it's been trending quite strongly. That's why it's working out. All these are working or seem to be working quite well. So here is a different example. So here we've gone long. It would have triggered long here at 124 or 124 480. I don't know, actual number doesn't matter, does it? The point is you're looking for the crosses of the MACD lines and the flip of the parabolic SAR. Sometimes it flips before. So we stay in again until the parabolic SAR flips, or we see a cross in the MACD line. What's happened here is the MACD unusually has crossed before the parabolic SAR has flipped. So, and that's a stronger sign. So that would have been a short-lived trade and not a great number of pips if you'd got out as the MACD has crossed back down. The blue's crossed back down below the orange. So you're out. What you could have then done here, as we've gone through 125 this morning, the parabolic SAR hasn't flipped this time, see, so this is a continuation trade of this one. So that one's been in, and we get out there looking to go short at this point because we've gone under the MACD. So MACD is normally lagging the parabolic, but the parabolic SAR has kept us in. We then go down, but then we cross positively again. Here's we go through 125 this morning. Here you can see there it's happened. It actually didn't cross positive again. So we've gone in, but this is a continuation trade. So we've already got out one. So it would be a smaller position because we've gone and so as you can see, it finally flips here. So we've got in here, and then again we flip down. So again, that would be a flat trade, or it might have even been a losing trade if we'd got out there. But yeah, flat trade. So that has gone short. So at this point, this strategy is now short this asset, which happens to be the sterling, on this time frame, this 1 hour time frame. So it's a trend following strategy using two very popular, MACD is probably more popular than the parabolic SAR indicators, and it works very effectively, as I've just demonstrated here. It doesn't work effectively when we don't have trending markets, where we've got ranging markets like we can see here. It's difficult to let me find a market that's not trending. Okay, so that's it basically. We're using the power, the strength of the trend indicator of the parabolic SAR and the smoothness of the MACD to take away, and the strength of the trending nature of MACD to take away the choppiness of the parabolic SARs. But in that example I've just used there, it was the other way around, wasn't it? The parabolic SAR remained, it wasn't chopping around as much as it can do, and remained to the upside as we came down and cooled, and the MACD took us out a little bit. Now we got back in as a continuation trade. But as I say, this system, this is running, it runs on lots of my other systems as well. Will be, if it's taken this trade here, it will be short this currently. Stop loss up here somewhere for cable on this hourly trade, see how it finishes the day or when it next flips. But it's been very successful there in that run, hasn't it? So it's a very simple and powerful combination. The MACD is used by many systems and strategists. Investment houses use it over a longer time frame. I don't know many people. I don't know any active traders off the top of my head that actually amend the MACD settings as they were first put together. Obviously there will be people, but I don't know anyone that's using it as an active trader, whether it's on a day trading, intraday trading, scalping, that mess with the MACD settings. As I say, it was invented back in the mid 80s, and the histogram was added about a decade later by Mr. Appel. And again, it's a good visual indicator as well. If you're not looking at the crossing lines, you can see the degree of a negativity, the red, deep red, mild red, positive green. So again, displayed typically at the bottom of a trading indicator. So there we go. That's MACD and the parabolic SAR strategy. It works really well. It works. This is the hourly time frame. If we just go back, it's most of what I do and what I show you guys is applicable on different time frames as well. Here's the 5 minute, same asset. That's the big volatility we saw in sterling. So this was short, then it's and you see the parabolic SAR here. There you go, on the 5 minute. It's been short since the 3 o'clock this afternoon here. So the last cross, the parabolic SAR cross there again. Sorry, the MACD cross there. Can you see? Let me just make that up a wee bit. There we are. There's the last short position there. You still want to be, but then it's come back there, so we're out there. So that's again a flat trade, but you'll be looking to go short. And again, literally, as we've just come to this chart, it's crossing now, okay, or it appears to be crossing now. But the rules are, remember, this is the 5 minute candle. So that was the 1935 that's just completed at another 3 minutes before this candle completes. And will this cross be clear and completed? That's the other thing you've got to be clear. It looks like it, doesn't it? Many would have probably started to add their short position here, but remember, it's, what is it? What's the asset? Well, it's sterling against the US dollar. It's 7:45. Markets have cooled down. The volumes have cooled down quite significantly. Spreads have probably widened a tad from the main body of the day, but obviously the US market is still open, but there's not much volume elsewhere today. But that's here as a 5 minute trader, that's looking to go short on the completion of this candle in 2 minutes time. So we'll see if that actually does, that cross completes. And it's a continuation trade again, remember, because the parabolic SAR hasn't flipped. It's kept you this side, although the MACD has taken you in and out. And now it looks like it's taking you back in. Remember, this is the first signal on that one. So anyway, I'll just wrap this up. Let's have a look at what's looking to trade tonight on my end of day strategy over here on this other platform. Currently, let me just refresh this, do a quick scan whilst you're all here. Any questions, anybody, about anything? We'll be back tomorrow for the Bank of England. Obviously, sterling in focus again there. So that has definitely it's still not completed, is it, that candle? But anyway, there's quite a lot. Looks like they may be triggering tonight, but again, obviously tonight isn't here yet. So Aussie dollar, pound Aussie, pound USD again. So that's of interest because we've already got an open position there. The Kiwi and the Swiss. The dollar Swiss as well. So dollar very much under the pressure here. So Aussie is looking to be long, as we saw in that round about that. But obviously the caveat being the 50 period moving average. But again, potentially 40 pips on offer for a near 80 pip stop loss on that. 63.25 we're looking for the Aussie at the moment. The pound Aussie. Obviously a much bigger mover, the pound Aussie, but again short here from 198.94 at the moment, looking to get to 198.54. Sterling we're already long. Again, it's looking for another 50 pips tomorrow to 125.56 potentially. And the Kiwi dollar, it's a bit tighter, that one. More 57.20 is what we're looking for, about 30 pips. A consecutive third day high for the Kiwi. So we'll see how all those pan out later on in a couple of hours. But that has crossed, my friends, as we've just seen there. There's our 45-minute one up. So we would have been short here. So this strategy is short here on this 5-minute time frame. Let's see how we get on that one as it continues to limp towards 125, but holding 125. That's the key thing on low volume. So just obviously be aware of what's going on and the time of the day you're trading, the volumes that are around, and liquidity is around. So that's it for this evening. In recap, we've had weak PMI data across the board really today. Waiting for the services sector. The caveat was the ADP being quite significantly stronger than expected, coming in at 183,000. And the other interesting point was the oil market. We didn't actually show you the oil market, did I? Let's finish with the oil market. There's that big build. It's 71.29 for the oil market. Let's show you what we've done there. So it's been limping lower all day. Oil, that's the $75, 70.75 level on Monday's hiatus, and we're at 71.30 now. So moving down again and again. That one here on the out, that's oil's been short from all day, basically 8 o'clock. You can see that there. You can see that's a good example again using this on the oil market. The parabolics are crossed negatively there, but the MACD crossed negatively at 8 o'clock. The parabolic SAR was still supporting this big rise up we'd had on Monday, and it wasn't until the close of the candle here that parabolic SAR flipped, and it triggered short at 72.26 this morning, and it's been short ever since. And our stop loss would be probably around about here now. If you're trailing that lower at the moment, to lock in some profits from earlier today. So oil short on this system and got a leg lower on the inventories we've just seen this afternoon. Okay, I'll see you all tomorrow for the Bank of England. Stay safe. May the pips be with you, and have a great evening, everyone. All the best. Bye-bye.